The Bank of England cuts through the noise but strikes a cautious tone. Welcome to Macro Matters, your regular look at what's driving the global economy. I'm Peter Devlin. As expected, the Bank of England delivered its second quarter-point rate cut of the easing cycle on Thursday. Governor Andrew Bailey stuck to his script, outlining gradual interest rate cuts, stopping short of offering any guidance.
Look, we've got good news. The disinflation process, as I showed in the first chart, it not only continues, but actually has been faster than we expected. And not just faster over the last year, faster since we were last here in August. And that's good. And it's encouraging. There is greater uncertainty out there.
But the path to further easing has been complicated by the new government's budget and 4 more years of Donald Trump in the White House. So will the Bank of England keep calm and carry on cutting? Well, to help answer that and more, I'm joined by Liz Martins, Senior UK Economist at HSBC. Welcome, Liz. Thank you very much for joining us. So let's start with the vote. And unsurprisingly, divisions remain on the MPC, with Catherine Mann resolute as the lone hawk. So why the dissent, and what will it take for the committee to come to an unanimous decision?
Yeah, well, thanks, Peter. I mean, it was actually less divided than what we were expecting. We thought that given we'd had a budget that was broadly interpreted as inflationary, a US election that's broadly been interpreted as inflationary, that maybe those two other sort of semi-hawkish members, Hugh Pill and Megan Green, who voted against the last cut, might do so again. Actually, they've moved over into the mainstream and joined their colleagues in voting for a cut, so they're not as divided. But look, the MPC acknowledges things are still very uncertain, and for one member, Catherine Mann, the risks to inflation are still too high to start cutting. And one of the points she's made in the past is if you have that uncertainty, maybe it's better to just hold rates where they are until you're absolutely sure and then cut them more rapidly once you are. So that's kind of her point of view. But obviously, the majority of her colleagues now ready to start gradually easing.
Let's take a closer look at inflation as well. And the Bank of England did play down its recent progress. We have seen the closely watched services CPI falling to lowest since May 2022. Are policymakers wary of declaring victory on inflation, especially with Trump's victory in mind?
Yeah, I think they are wary of declaring victory, and they're right to be wary. It's not game over by any means. There have been some very positive signs, but one of the reasons they played it down on services was that some of the drivers of the below expectations inflation number in September was things like airfares, which can kind of bounce up and down from month to month and maybe aren't telling us too much about underlying demand. Then you've got a budget that potentially does raise inflation back again, that companies maybe pass on some of those higher costs from taxes back onto customers. And yeah, I think it is too soon to say mission accomplished. Now, on our forecast, that mission will be accomplished, that good news and that progress will continue. But it's certainly true to say that there are still risks at this point.
So markets did downgrade their pricing of a cut in December after a meeting. Chances now falling to around 20% from around 35% beforehand. So do you think a Christmas pause is on the table?
I do think a Christmas pause is on the table, unfortunately, or unfortunately for those who have a floating rate mortgage. Look, it's possible. There are 2 more inflation numbers and 2 more labour market numbers which are going to be published before that December decision. If all 4 of them come out dovish, low wage growth, low inflation, low services inflation, it is possible that the picture looks quite different by Christmas. We know how quickly things can change. But for now, the read that I got is, look, the BoE cut in August, paused in September, cut in November. That is a gradual and a cautious pace. They signalled they're still somewhat cautious, so that would suggest that that quarterly pace continues for a bit longer, including with a pause in December.
So finally, Liz, let's look ahead to next year as well, and markets are pricing fewer than 3 rate cuts ahead, as potentially leaving the UK rates more than 2 percentage points above the ECB in about a year. So do you see this as a realistic outcome, or should we expect faster cuts in the spring?
No, I don't see it as particularly realistic, actually. I do think the market has gone a little bit far in pricing out so many rate cuts from the Bank of England. I don't think the UK is so very far away from Europe, as you say, is suggested by market pricing. And I think, yes, we have had a budget with potentially inflationary impacts. And indeed, we've just revised up our own growth forecasts on the back of that budget. But crucially, where is this growth coming from? It's coming from government spending and government investment, whereas the private sector economy has been negatively affected net by this budget through taxation. And then you look at the state of the labour market. We had a survey out, the jobs PMI, just after the Bank of England meeting, and that survey pointed to continued weakness and unwinding in the jobs market, weaker pay growth. So, I'm not persuaded that the UK has this much more inflationary outlook than Europe. And I'm not persuaded there should be such a big gap. And I do think the news hopefully will be better than people are expecting next year on inflation, and that will allow more rate cuts. So what we think is, as I say, this quarterly pace continues. We skip December, we skip March, we skip June. So we go for a quarter for the first half of next year. But then hopefully the numbers will be more under control, and we will see the BoE switch to a consecutive meeting schedule and get bank rate moving a bit faster.
Liz Martins of HSBC, many thanks for your thoughts. And that's Macro Matters. Don't forget you can watch more videos on Reuters.com.